Exploring the Inflation Reduction Act. The Inflation Reduction Act, IRA, was designed to prevent large corporations from exploiting tax loopholes, but it actually affects individuals and businesses of all sizes. There are 4 key components to the Act. It drives investment and creates opportunities in communities, particularly in previously disadvantaged areas. It encourages businesses to meet labor standards. It aims to lower the cost of clean energy or energy property-saving improvements for businesses and individuals. It encourages community-based investment by giving governments and tax-exempt entities tax credits as IRS payments. In a nutshell, the Act was designed to create jobs, lower energy costs for individuals and businesses, and tackle climate change by decreasing pollution. But it covers more than just energy. It also affects corporate and personal taxes and has implications for healthcare. How IRA affects taxes. The IRA establishes a 15% minimum tax rate for corporations with profit over $1 billion for 3 years and imposes a 1% tax on stock repurchased by a publicly traded corporation. However, this doesn't apply to repurchases treated as dividends or those from employee stock ownership plans. Also, any business that works with crude oil or imported petroleum products will be taxed 16.4 cents per gallon, adjusted annually for inflation. The IRA extends the holding period for carried interest to qualify for long-term capital gains tax treatment from 3 to 5 years. Finally, it introduces a number of new energy tax credits. These include the investment tax credit and the production tax credit to boost investments in renewable energy projects. As a bonus, some of these credits can be transferred or sold for cash to give you more flexibility and liquidity. Healthcare cost reductions. A key component of the Act is negotiating prices for prescription drugs under Medicare. From 2026, a small number of drugs will be included and the list will grow annually. The IRA also introduced a monthly cap on insulin costs for Medicare recipients and a cap on out-of-pocket payments for beneficiaries. Under the Act, drug manufacturers must offer rebates if their prices for Medicare-covered drugs increase faster than inflation. This is to prevent excessive price hikes on medication. These changes will affect your tax planning. If your business earns profit over $1 billion, you need to carefully consider income calculations and how you manage them. You might also need to rethink capital return strategies with regard to stock and consider dividends over buybacks if you want to minimize the impact of the 1% excess tax. You'll also need to make the most out of credits and deductions. This means making the right investments at the right time. If you're a high-income earner, be aware that the Act includes provisions to increase IRS enforcement and auditing. So, your tax planning needs to emphasize compliance to avoid tax penalties. One way to do this is through tax-efficient investments. The IRS has a number of penalties in place for businesses and individuals that do not comply with the changes introduced by the IRA, and they come with hefty interest. But don't panic, we can help you avoid these issues. Our subscription-based tax services ensure that you have a great strategy in place. This makes your tax season stress-free and ensures all records are accurate and secure. Schedule a discovery call